Welcome back to Alpha Recap, your quick, smart wrap on the markets after the bell. We recorded this after the close, so we'll be talking about what happened today. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks for having me. Lots to unpack from a pretty hectic session. Policy chatter, a headline-grabbing IPO, and more single-stock fireworks than you usually see.
Totally. Okay, let's start with the big macro thread everyone was talking about, the Federal Reserve and policy uncertainty. So what really stands out here is Morgan Stanley's line that the balance of Fed policy risks is shifting toward firmer inflation.
Right. That comment pushed traders to reassess the chances of further tightening. At the same time, a senior person at Goldman Sachs basically said traders were right to price in the risk of hikes, which means market-implied odds were being publicly validated.
So the story isn't just data. It's about how much the market trusts signals from traders and the Fed. I mean, when you step back and look at this, the debate about the Fed chair's communication style showed up too. Kevin Warsh choosing to be called chairman, and the idea that silence may be the point. That feeds a whole different kind of uncertainty.
Exactly. If the new leader talks less, that could mean two things. Fewer words could dampen day-to-day noise, or it could leave everyone guessing and create bigger moves when surprises hit. Analysts are split on that. Some think calmer talk means fewer interpretive swings. Others think less guidance amplifies risk.
And markets closed mixed today, with pronounced single stock volatility, right?
Yes, we saw pockets of strength and big drops. That micro-level volatility was the other headline besides the Fed and SpaceX.
Let's talk SpaceX next. The IPO was front and center. Give us the quick version on why this is more than just another listing.
SpaceX was huge, not just because of size, but because it creates concentrated private wealth events. Reports suggested this was record-setting in scale and attention. New millionaires show up, and that changes demand for wealth management, tax planning, and liquidity products.
I mean, talk about instant clients. That was part of the story, right? Leadership messaging changed too?
Right. Gwen Shotwell had previously expressed doubts about an IPO. Her newer messaging seemed aimed at reassuring investors. Still, that internal debate about timing and governance can shape how the broader market receives the offering.
So SpaceX changes not only supply of shares, but also fee pools and where money flows in the wealth ecosystem.
Yes, advisors are already modeling concentrated equity outcomes. We saw numbers being used like about 24% and about 11.5% in advisor scenarios for concentration and liquidity planning. That shows how seriously people are taking the wealth management impact.
Okay, shifting gears to single stock moves. This was a day where specific names made headlines. Give us the extremes.
For sure. CVS finished the day up to $100.39 after a strong quarter and what analysts described as a post-quarter re-rating. Coverage went up by about 26%. On the other end, a microcap plunged hard. It fell down about 42% to 29 cents on 31 million shares. That's the kind of extreme that wipes out value fast.
Those PAVS type moves are brutal for holders. And then there was interest in AMD tied to a Citi note around Meta's potential spending on AI chips.
Yeah. Citi suggested Meta could spend more on AMD AI chips than the street expects, and AMD traded in a roughly $458 to $490 intraday range. Analysts flagged an earnings catalyst on August 4th, 2026, so there's near-term focus on the data center AI story.
Short reaction.
Big move.
Short reaction.
Right.
Let's unpack why Fed signals really matter for these stocks. Make this simple for listeners.
Sure. In plain terms, the Fed affects the discount rate investors use to value future profits. If the market thinks inflation risks are higher, discount rates go up, and that tends to compress valuations for long-duration growth assets like AI-heavy names. Meanwhile, cyclicals and value names, which rely less on distant cash flows, can hold up better in that scenario.
So data suggests a regime shift toward firmer inflation would nudge allocations, but not necessarily in a one-size-fits-all way.
Right. Analysts note that this is a scenario planning moment. Passive, long-term investors were advised to stick to horizon-based discipline, while active traders might reposition more tactically around Fed signals and event catalysts.
Give us a quick run through of the conflicting views we saw today.
On the policy side, Morgan Stanley warned inflation risk looked firmer. Goldman countered that traders had already priced hikes correctly. So one camp says the inflation tail is rising, the other says the market already internalized it. On Fed communications, some say less chatter equals less noise. Others worry that less guidance increases ambiguity. And with SpaceX, there's IPO optimism versus governance caution from leadership comments.
Short reaction.
Yeah, that tracks.
Let's hit implications for different types of investors and what they might watch next.
Passive long-term investors. The note was to avoid headline-driven overreaction and think in terms of horizons and risk tolerance. For active managers and traders, market-implied pricing and single-stock volatility create tactical opportunities and risks. Fixed income folks should revisit duration and credit assumptions if the market is pricing more chance of hikes. Wealth managers should stress test concentrated positions, especially with the SpaceX wealth events unfolding.
What were the specific watch items analysts called out?
Keep an eye on Fed communications and any shifts in the dot plot. Track market-implied probabilities from futures and options for front-end rates. Watch SpaceX IPO allocation, lockup details, and governance comments. Monitor earnings catalysts, CVS momentum, AMD's August date, and operational proof points at companies like FedEx. And watch volatility and microcap liquidity after PAVS-style intraday shocks.
Okay, very actionable intel. And quick note on the Fed executed turnaround stories like FedEx. What did analysts say there?
They said FedEx is at a crucial point where strategy execution is done, and now the market will look for recurring improvements in margins and free cash flow. That transition often creates temporary volatility as expectations reset.
So, what are the strategic considerations investors should keep top of mind?
Model scenarios for both a quieter Fed and a Fed forced to tighten. Retest duration and rate exposure with market-implied yields. Stress test liquidity and concentration risk as big IPOs reroute wealth. And maintain event-driven vigilance. Earnings beats and misses or microcap shocks can reprice things fast, so position sizing and stop discipline matter.
Quick reaction.
Honestly, I was a bit surprised by this one.
Wrapping up, what are the 3 big takeaways you want listeners to remember from today?
1. Policy uncertainty is front and center. Analysts note there's tension between market-implied pricing and warnings about firmer inflation. 2. The SpaceX IPO is more than a headline. It's creating structural liquidity and wealth management effects. 3. Single stock volatility was pronounced. From CVS's re-rating to a microcap collapse and renewed interest in AI chip supply dynamics, event-driven moves mattered today.
Perfect. Quick reminder, nothing we discussed is personalized advice. This is informational only and not a recommendation to buy or sell anything. Analysts note market signals and scenarios. You should consult a licensed professional for tailored advice.
Right. And if listeners want to dig deeper into any of these threads, we've got more analysis on the site.
Final call to action. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you next time after the market closes.